Hello and welcome to another Euro USD Forex update. It's been a while since we've published that last Euro USD update on this channel. We were still, I think, early November here, and I mentioned to you my targets for this first 5-wave pattern to the upside. I watched it again and explained at the time that 5 waves to $1.09 roughly would align very well with Fibonacci rules and guidelines or Elliott wave rules and guidelines for a first wave to the upside here from the low that was struck here in the support region in October. We now want to explore in how far this target was reached and if the count needs to be adjusted and what the relevant targets are now for any correction, because as you can see, seems like a correction is unfolding. So let's take a look at that. So I want to focus only on the short term. We take a look at the 1 hour time frame. That's also the time frame I explained the count in last time, at least the detailed count. So the assumption is still, that's unchanged, that wave 2 completed here. Second, need to adjust that slightly. Completed here in October last year, early October. Then we had our wave 1 to the upside, that's unchanged. We talked about here possible flat structure and a WXY correction in a wave 2. Wave 3, these are just labels I placed at the time based on the Fibonacci levels. So we have to place them to the relevant waves now. Obviously at the time when I made the video, nothing here was developed. But we looked at the Fibonacci levels, Fibonacci extensions, and they typically give us a good guideline, you know, about where things might be moving to. And the idea was sort of that 5 waves to $1.09 roughly would give us the minimum requirements for a 5-wave pattern. And yeah, I mean, that's what we've seen. However, I think it stretched to $1.10 in the end. So that is the 5th wave. The top of the 3rd fits best here. And the 4th was this. And we had an extended 3rd, which is a 5-wave pattern in itself. Very nice Elliott wave impulsive structure that we see here. But the question is, okay, what's this, right? Now, as you might be able to see, this move to the upside looks like a 3-wave pattern. So I would see that actually as an overshooting B wave, which is quite bullish in a wave 2 correction. Obviously, that first 5-wave move up basically is in line with my forecast, suggesting that an uptrend has started after a more substantial low was put in place in October last year. This is further confirmed with the concept of a high B wave because technically speaking, the correction started here. Whereas most people who are not using Elliott wave might see this as the top of the trend. I see this as the top of the first structure actually. And this is simply part of the correction already. But we know that overshooting B waves happen. And we know that overshooting B waves typically indicate a bullish market ahead. So it's in line with my forecast that we have here a 1-2 setup that could send the Euro USD chart higher in the coming, basically in the coming months. So looking at this, it looks like the correction could be nearly finished, to be honest. We need to look at the subwave structure now. So best I can tell you is that from this November high, the initial move down, it looks like the A wave of the wave 2. The move up like an overshooting B wave. And the move down could obviously consequently be a C wave. So basically that we're dealing with a flat structure. These flat structures mean that the C wave doesn't necessarily need to end below the A wave, especially if the B wave did overshoot. Now what we can do, we can use now the Fibonacci extensions to calculate a possible target for wave C. So we take the length of the A wave, we go to the high of the B wave, and typically what we're looking for is the area between the 100% extension and the 161.8 extension, and $1.66 is sort of the next support. So I leave that on the chart because that could be at least, you know, it's not super reliable, but it's the next level to watch to the downside. Possible the wave C might finish there. Obviously, there is structural support exactly there. And there's also structural support here, basically where we're now. What does the wave count suggest? Does it allow already for completion? I would say it's possible. Yeah, I think wave 2 could be over at any time. But it's quite a messy structure that we've got here. Just by looking at the wave count itself, I would actually say that this here was possibly a wave 1 of C. This was the wave 2 of C. Yeah, this is difficult because it looks more as if a diagonal pattern is unfolding here, which is always a bit difficult because you have a lot of... I definitely don't see a clear fourth wave and at the end of a third. I mean, if it's a diagonal, and again, this is not impulsive down, right? Which is good because it's in line with the idea of an unfolding C wave, and you see the angle. It's not very steep, so it makes sense to see it as ending diagonal. Obviously, the third wave needs to be an ABC structure. The best I can probably tell is here that this might have been the A, B. We're now moving down in wave C of 3. So it's something like this here is unfolding. This would be sort of the more bearish variant. We would need to see where it stops. But the strong sell-off here suggests we're still in the third wave of wave C, obviously, right? So it, you know, depends when the market shows a first reaction. So just want to show you here the two possibilities. Could also obviously be a WXY structure, right? And then the low could basically be in at any time. Very open to the idea that this is now wave C here of 3 that's unfolding with possibly, you know, the possibility of finding support around that $1.66 area. Again, if it's a WXY, then the low could be in with the next, you know, swing low basically. I can tell you that a break, a break above this high at $1.09 is probably the first indication that really a low has been struck and that the third wave to the upside has started. So what I can tell you in summary is that this correction could still unfold. I gave you the next support. Watch that support area. Watch the current level. Watch the current level. I mean, at the moment, the bottom line is the trend is down. Okay, so that has to be the perspective. The trend is down, but we are in an area where a reversal could occur at any time. So just watch it. I can add, in addition to the target for a C wave, I can add the standard support zone, and it reveals that we have now reached the 50% fib level. And it's interesting to see that the golden ratio level, 61.8 retracement, overlaps with the 1.618 extension. So there's good confluence there. Yeah, good Fibonacci confluence together with structural support. And then below that, we still have the $1.05, so 10569 level to watch. Target for a third wave, I can really only calculate once the wave 2 has bottomed. But I mean, we can calculate the target based on the assumption that we're going to find support at $1.66 here. Then target for yellow wave 3 to the upside. Typically, I'd be looking at the 1.236 extension. That's $1.13. Yeah, that's $1.13, $1.14. Could also go a little higher, so extension's always possible. Then you will find the wave 4 probably somewhere in the region between $1.10, $1.12. And the wave 5 might then stretch a little higher to $1.16. That will depend to a degree on how high the third wave went. But this is sort of the next outlook. So last update, I gave you an outlook to complete 5 waves. They are complete. Now we need to be watching for completion of the wave 2 pullback. It's not complete yet, so the short-term trend is down. Watch for a first reaction, possibly in this support region. And then the third wave, obviously I gave you a target for that as well. It would then take, furthermore, a break above this wave 1 high at $1.10 to further confirm the third wave is unfolding, and the break above the B wave high would help further at $1.11. Yeah, that's my update about Euro USD. Hope you liked the update. Thank you very much. Have a great day. Bye-bye.